fast growth in the cloud. On top of our toughest comparison of last year, our cloud business grew 31%. Our core business is rock solid at 9%, and our operating income also accelerated in the quarter. So you have this very nice trifecta where our new business in the cloud, our core business rock solid, and the operating margins are now expanding just the way we said they would. So SAP is in very good shape as a growth company.
Bill, a number of brokers love your stock, and you can see that in the recommendations, but they will be looking for justification in the numbers today. And typically when you see improved guidance from a company, it is a reason to sit back and applaud the company, perhaps buy more of the stock. But if you look at the reasons cited, I wonder whether it's just all really down to the Calidus acquisition. I know you've cited the operational performance as well, but the numbers to me truly only reflect the input from Calidus.
Well, it's true. We just gave our annual guidance in January, and then upon closing the Calidus deal, we accounted for how much that would lift our cloud revenue and thereby just change the forecast to include Calidus, which is standard operating procedure. But the big picture is, if you look at the SAP company right now, we're gaining tremendous market share in the cloud against all of the cloud companies, particularly the cloud companies obviously in Silicon Valley. And if you look at the core business, we're the only one that's actually growing the core. And the big thing was that the shareholders wanted is margin expansion. Now that you've done all this at scale, give us some margin expansion in the story. And today we have, of course, as promised, delivered that. So I think another interesting thing is the currency, because as much as we've grown, we actually lost 6 points, 7 points in some cases of growth just to currency. So when you add the currency effect to our actual results in US dollar terms, I mean, it's a total rout of SAP in a market share sense against any of our competitors. So our shareholders should be feeling very, very good today.
Bill, good morning to you, sir. There's a very good piece on Forbes previewing your numbers from late last month as well. It had said, we expect cloud margins to continue declining in the near term as the company faces competition from software behemoths such as Microsoft, Oracle and Salesforce. Do you recognize that analysis, sir? Cloud margins will continue to decline.
No, actually, our cloud margins are going up. And the reason that they're going up, Steve, is we have an innovation-led agenda here. So if you think about our assets, whether it's for line of business executives in sales or HR, or it's business network type transactions where you're procuring things at a better price at scale, or even acquiring talent anywhere in the world, we do that at a higher margin profile than any company there is. Where we have to make sure we're driving our margin performance is when you're in a private cloud environment, and we do that with SAP solutions as well as an open ecosystem. And that has now hit scale, and that too has turned profitable. So margin in all of our businesses is on the rise. That's why this margin expansion story is so key to the shareholders, because that's the part of the puzzle that they've been waiting for, and it has arrived.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.